Okay, this is the January 2009 exam question. So first thing you would do is you would make a note of the year. So the year ended 31st of October 2008. So anything with that date, it'll be the end of the year, so the closed inventory, for example. Anything beginning to the 1st of November 2007 would be the opening. So opening inventory, opening capital. And anything that happens between 2008 and 2009 will be current. So go through the trial balance and identify what's on the income statement or the statement of financial position. So bank balance, that's an asset or a liability, so that's the soft. Capital account, well, that's the soft because that's capital. Carriage inwards and outwards, well, they're income statements because they're expenses. Discounts, they're expenses and income, so income statement. Drawn is capital, so soft. Fixtures and fittings, well, that's a non-current asset, so that's what the soft. General expenses, it's an expense income statement. Purchase and sales, income statement. Rent and rates, income statement because it's an expense. Returns, again, income statement. Stock, which means inventory, remember, well, that's the income statement because that's the opening stock. And the trade debtors and creditors, which means receivables and payables, that's the soft because that's the assets and liabilities. And wages and salaries, that's an expense. Okay, before we get into the adjustments, something that I haven't really mentioned too much, well, we have, but we need to mention it again, is that debits, remember, are the expenses and the assets, and credits are liabilities, capital, and income. So when you're working out what goes where, look at what column it's in. And the additional information at the bottom, well, we have the stocks, the inventory at the end of the year, so that's both income statement and soft. Wages owing amounted to 830, so that means it's an accrual because we owe the wages. So we added on to the amount, so we add on 830, and since it's something we owe, it's a liability, so it's other payables for 830. General expenses paid in advance amounted to 180, so that's prepayment. So we take away from general expenses because we shouldn't have paid it this year. And that's an other receivable because it's money that is owed to us. If we ask for it back, we receive it back. So it's another receivable of 180. And depreciation on the fixtures and fittings is the straight line method of 15%. So you do 15% of the cost value, so 62,200, and that gives us 9,330. So that's this year's depreciation, and also we added on to the provision to get the new provision for depreciation, which will go on the soft. Okay, then you have to put an order on the income statement. So I didn't make a video for this, however, I pressed pause at the beginning, so it didn't actually go on video, so you can just see it and I'll talk you through it. So put the heading if you haven't already, if it's not already given to you, which is given in this question. £3 symbols, although like I said on the other video, you can get away with just doing 2, and put the revenue at the top. And then the sales returns, so the returns inwards. Then we're going to work out the cost of sales. So that starts with the opening inventory. Then we work out the purchases. So the purchases you could still do in the middle column, but I'm going to do in the third column, just because I like to have 3 numbers in the middle column, like I said. So purchases, we take away the purchase returns, so return outwards, and we add on the carriage inwards. So how much it costs to get the goods to us. Then total that up, and that gives us what I would call the net purchases. People don't need to give that a name. And then we take away the closing inventory. We then add together these two and take away that one, and that gives us the cost of sales. We take that away from our sales at the top to get our gross profit. Then we would add on our income, and this is when I said I use that trick. So the income should be in the credit column. So look down the credit column for anything that says IS. So discounts, purchases and sales, so that's the sales, that's already on there. Returns, that's purchase returns, which is on there. And that's it. So that we're going to go 1, income, and that's discount. So we call that discount received. And we add that on to the gross profit to get our new kind of gross profit plus the income. Then we're going to take away the expenses. So again, expenses should be a debit. So look down here for any stuff that goes in the income statement that we haven't already put at the top. So the top is the main kind of income expense to do with trading, so the purchases, returns, that sort of thing. So carriage outwards, general expenses, rented rates, and wages and salary. And don't forget a discount at the bottom. So just put all those numbers on there. And discount allowed, I think I said that. Total them up, take that away, and get your profit from the year, which needs to be labelled. You can't just do abbreviations and double underline it. So 22338. Okay, so that's the income statement. So remember, we do that one first because we need the number for the soft if it asks to do that. And it's asking for, part B, capital section. So capital section, remember, we look for, well, we start with the opening capital, which is there, 61,489. There's no extra capital being put into the business, or this doesn't say in the question. So the next thing we do is we would add the profit for the year. So 22338, and anything that reduces capital, well, that's drawings. That would be the debit column. So drawings is there. 28,650. So take that away, and that gives you your closing capital of 55,177. And then the next bit is the current assets. So remember, the current assets, the first one to put is put the closing inventory, because that's the one that everyone forgets. So the closing inventory is down here, so 55,350. Then our trade receivables, which is on the debit side, because remember it's an asset, so we should be looking at a debit column for assets and expenses. So 11,285, and then other payables, other receivables, sorry, which is down there is 180. And there's nothing else, because look, bank's not on the debit side, it's on the credit side, so that means bank overdraft. So 66,815. And then the final part, part C, asks you to write a memorandum, which is just means like an email to Liam O'Brien, advise them of 3 types of stakeholders who may have an interest in the financial statements of this business. State 1 interest that each may have. So you would fill this in by writing to Liam O'Brien from your name, put the date, and the subject. You could call it something like stakeholders. Like imagine you were sending an email. So remember, there's 2 types of stakeholders. There's internal and external. So for the internal, you could talk about the owner, the managers, the employees, and think like they might be interested. Well, the owner wants to know how much money they've made, and the possibility of expanding. The managers need to know the financial stability in terms of decision making, and employees need to know are they going to get paid their wages on time, and is there any chance of a pay rise, and job security. You've got external, so you've got the bank or lenders, so they might want to assess the financial statements to see how much liabilities they currently have. Are they making enough profit to cover the interest on the loan and the repayments that the loan might need? You have customers and suppliers, so they might want to see are they going to continue trading, are they still going to offer the goods? You have competitors, you might want to see how well the competition is doing, so should they raise their prices, etc. You also have the local environment to see what impact it might have to the local community. They're making more money, they might invest more into the local community. And then you have the government for tax reasons. So pick 3 that you feel confident writing about and write about them.